Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Glad to be with you like every week. Brian London cannot make it this week, so I'm flying solo, but I do have an amazing guest. If you want to get Brian London's 2 top mining stock picks and access to the Golden Opportunities newsletter, go to goldnewsletter.com/bonus. That's goldnewsletter.com/bonus. My guest today is a financial pundit with the title of Quoth the Raven. And to be frank, I don't know what quoth means, but his actual name was Christopher Irons, and he is of QTR Research, and he challenges what he describes as the long bias spin of cable news networks. So he's an independent researcher. He explains that he's not licensed or regulated. He's a free man. And he has been featured on many major outlets. He has a prominent podcast of his own, and a YouTube channel, and a strong Twitter following. Chris, if you don't mind me calling you that, welcome to the Gold Newsletter Podcast.
Thanks for having me. You can call me whatever you want. So no problem.
Okay. And
it's a very low-pressure environment.
Yeah, that's great. And Quoth the Raven, is there some kind of weird meaning to that? What's going on with that?
Well, it's actually a line from Edgar Allan Poe poem called The Raven, which is like one of his most famous poems. But really, there's no great story about it. I started to use it online as a moniker back in like 2010, just because I was trying to be anonymous with my commentary. And it was something I hastily threw together in like 3 seconds. I think I had just read Poe or something. And then it just kind of like stuck. So I didn't know it was going to be this like decade-long way of how people were going to identify me. I just kind of picked it out of thin air based on whatever I was reading or doing that day. I don't even remember. And inadvertently, it just kind of stuck over the course of, almost a decade now. So that's the story about that.
Yeah, why did you want anonymity? Did you have another full-time job at the time?
Yeah, that's exactly right. There were 2 reasons. One was, I was being critical of companies and things like that. And so anonymity affords you a little breathing room in, obviously you still need to tell the truth and you need to rely on facts and you can't make shit up. But anonymity gives you a little bit more of a cushion. Oftentimes when you're critical about companies, you get backlash from investors in the company that don't necessarily see things the way that you do. So that, and also too, I was working at the time as well. And so I was just trying to maintain a low profile for the most part.
Right. I mean, to be frank, that bit about keep being independent or speaking for yourself means such a lot to me, because as I've gotten older and worked more in media, I just see how, let's just say, so many outlets have their slants, and also many people do not feel at liberty to speak their minds. And that's just a great tragedy to me. One of the great things about the United States, when I first came here, 2 decades ago now, was that people could more openly share their thoughts. There was more free speech, of course. And now I see the way that brokers or people in the financial sector, either legally or just by, let's say, economic pressures, don't really speak forthrightly.
It's a huge problem in the financial world, by the way, too. Just so you know, that's why these pile of shit companies with awful balance sheets that don't generate any cash can continue to be, perpetuated, not only by news networks and people that work in financial media and the people that are just ignorant and don't understand that they're piles of shit, but, people that are out there that are critical of these companies get lambasted. They get looked upon as though they are the 4 horsemen of the apocalypse, when really all they're trying to do is point out a misallocation of capital and resources and malinvestment, right? And so it's a huge problem in the financial world. And it's extraordinarily difficult if you're going to be critical not only of a company, but maybe if you're going to be critical of central banking policy as a whole or whatever. If you're going to go against the grain, especially in the world of finance, where there's a lot of money at stake. It can be immensely difficult. People speak out against you. Companies sue you. It is a laborious and capital-intensive process sometimes. There's a need for it. Otherwise, people wouldn't give a shit what I say.
We've had another guest, Mike Larson, on the show discussing what he calls the Uber bubble. And I guess it's like the tech bubble 2.0. And he mentions companies like Uber, which have these enormous valuations and yet still lose hundreds of millions of dollars every year. Is that one that would fit into what you just described?
What I think is going to happen is I think there is going to be a number of companies that make it. I think there's going to be a number of cash incinerating, insolvent balance sheet style tech companies that make it. Long investors always point back to Amazon. They say, oh, this is the Amazon story happening again. Everybody was critical of Amazon. And I don't know who they're going to be. I think when you look at companies like Uber, and you look at companies like Tesla, you look at companies like, WeWork just tried to IPO. Some of these companies are going to make it, and a majority of them are not. Which ones make it, I think, will be predicated upon decisions that management makes. I do think that with technology, like when you look at something like Uber, right, and Uber's a good example that we could probably debate either way, because it is incinerating a shitload of money. And the Austrian side of me, which is pretty much my entire makeup when it comes to monetary policy. I mean, I'm pretty much from the Austrian school. So I understand that you can't be a company that's going to burn hundreds of millions of dollars a quarter and have that be sustainable. So how are you going to pay a multiple on that? How are you going to pay, this insane valuation on a company that is showing no path to profitability? It's a very difficult situation. But when you look at like what Uber is and the fact that, basically it's a software-based service that, they're trying to expand into air cabs and things like that. It is disruptive, and it is something that where I think they have the potential to be profitable over the long term. The question is, by what order of magnitude and how and at what cost is that going to come? How big is it going to get? I do think there is an ushering in of, and I don't say this often, so it's good that I'm saying it here. I do think there is an ushering in of certain tech companies and certain types of technologies that are going to be part of a bigger sea change that we're going to witness over the course of 20, 30 years. Like 30 years from now, like you'll be able to order a helicopter from your phone. Like your car will, like, as Elon Musk says, act as a robo-taxi when you're not around, right? But like there is a huge difference between talking about that, which is speculation 30 years from now, and the cold hard facts of a company's financials right now. We're in a market now that assigns a huge valuation to these companies on the pretense that the future is now, and they're definitely all going to make it, which I don't think is the case. I think probably, 15% of the Netflix-style, Tesla-style valuations will make it. And I think 85% will get, rightfully so, pummeled in the next recession. Whenever it happens, we're already long overdue for it. But I do think that tidal wave, when it occurs, is going to wash away a lot of bilge and sewage and just general nastiness in the market right now. So, to sum it up, I don't think all companies that are valued like this are going to go to zero. I think a lot of them are. I do think we're in an enormous bubble. But I would be remiss if I said I wasn't acknowledging that there are some technological shifts happening in the world of technology. And technology is going to continue to evolve. So, we can't expect yesterday's technologies and yesterday's companies to continue to push the ball forward, which is why your Sears is bankrupt and Amazon is going crazy, which is why General Electric is having a lot of trouble and other, big technology companies are not, which is why cloud computing is a thing now when it never was 20 years ago. So we can't ignore that stuff. We can't ignore these big changes. However, there is a lot of nonsense and bullshit out there, and I think that it needs to be looked at through a skeptical lens instead of the lens that the financial media and everybody else looks at it through, which is, hey, everything's fucking great. Everybody's happy. let's just ignore the cold hard facts here, which is if this company wants to stay in business for another quarter, they're going to have to come up with $250 million somewhere. That's a problem that is recurring and that you can't ignore.
The Gold Newsletter podcast is proudly sponsored by the Discovery Group of Exploration and Development Companies. To learn more about our exceptional track record and exciting future, visit discoverygroup.ca.
Hello and welcome back to our weekly interview with the Discovery Group. The Discovery Group is the proud sponsor of the Gold Newsletter podcast. As you know, each episode we interview one of the Discovery Group companies. I am Daniel Duarte, editor of this podcast, and today I have the pleasure of having on Claudia Tornquist, president and CEO of Dunnedin Ventures, a junior exploration company focused on discovery. Claudia, thank you for joining us again.
Thank you for having me. It's a pleasure.
You know, back in November when we last spoke, you were completing a drill program at your MPD project in southern British Columbia. You were also expecting assay results. Is that drilling phase over, and do you have results you can share with our audience?
Yes, we completed the drill program last year in November, and just a couple of days ago we received and press released the results. Maybe a very quick step back, what we drilled or where we drilled. It's our MPD copper-gold-porphyry project in southern BC. It's a project that's right between Copper Mountain and Highland Valley, two of Canada's largest copper mines, very accessible with great infrastructure. And as I said, we drilled there for a month in November, 1,800 meters in total, 3 holes. And with the third hole, we had a very nice discovery hole. We were very pleased with the results. The hole was mineralized from top to bottom, from bedrock surface to end of hole. So the entire intercept was 763 meters of copper mineralization, copper-gold-porphyry mineralization. Over the entire length of 763 meters, the average grade was 0.28% copper equivalent, which we were already quite pleased with. But what we liked most and what is the most exciting is that we encountered higher grade zones within this interval, and the best one was 102 meters of 0.68% copper equivalent. And that's very exciting, keeping in mind that the local mines mine material of 0.25, 0.3% copper maybe. So we know now that at MPD we have a large-sized copper-porphyry system, and we know there are high-grade zones, and that for our first drill program is an exciting result and a good start for our year and for further exploration to come.
Of course, so I'm guessing you're going to be focusing all your energy on this project, right?
The next step for MPD will definitely be a larger drill program to follow up on this initial success. So at the moment we are doing our homework. We have obviously now a lot of new data, new information that will help us to understand the system and how it is oriented and how where the center or centers are of the porphyry, the sweet spot, the high-grade zones. So we're doing this homework over the next couple of weeks, and then we will be back on the ground when the snow is gone to drill further, and we will have a much larger number of targets.
Excellent. Let's switch for a moment to your other porphyry project down in Arizona. What is the status of that?
That's a project called Mojave that we acquired last year. It is in many ways very similar to MPD in that it is a large porphyry system. It is very accessible. It's very close to Freeport-McMoran's Baghdad mine, a very large copper mine. And just like MPD, Mojave is also right off the highway with all the infrastructure right there, electricity, etc. So very, very conveniently and strategically located. And it has also been historically drilled. There's a lot of smoke, a lot of copper intercepts already and soil anomalies, etc. We've just over the last year since we acquired the project done our homework and evaluated all the data we have from a historic work and are now ready to go on the ground, get our boots on the ground and start probably with some geophysics and then later some drilling. And that's also an option we have open for this year. Obviously, after the good results at MPD, that's our priority. But Mojave is the second on the list for exploration work this year. And just like MPD, it has great discovery potential and is, so to speak, our joker in the pocket.
You also put out an annual investor letter on January 6. Can you summarize 2019's achievements and what lies ahead for 2020?
Yeah, 2019 really was a year of transition for Dunnedin. We were historically a diamond explorer and in 2018 made a strategic decision to change our focus to copper. So we acquired 2 new copper projects in addition to the Trapper project, which we always had in our portfolio. And over the last year, these acquisitions took place and we changed our focus from diamonds to copper. So it really was a transitional year, if you will, for Dunnedin, that culminated in the first drill program at MTD in November. And now that's sort of the start to more copper drilling, more copper news, more exploration news. And this year will be fully focused on copper exploration, both at MPD and then Mojave.
Perfect. We're going to be following that transition very closely. Claudia, thank you so much for your time today and for updating us on Dunnedin Ventures and its opportunities.
Thank you very much, Daniel.
One of the challenges is that, particularly in the media, stories that are more entertaining will get sold, will get written. And so, obviously, these tech companies, they give a more exciting story. It's just more entertaining than talking about, I don't know, a water utility or something like that. It reminds me a little bit of the cryptocurrency space. I'm obviously a big fan of alternative currencies, and just like you, I would like to get away from central banking. However, there are now almost 1,000 cryptocurrencies with a market cap over $1 million and 16 over $1 billion. Now, I don't know if anyone can make the case that anything like that number of cryptocurrencies can exist as a medium of exchange, that there'll be people out there using them in that way. So there's going to be, in my mind, a correction, and maybe as you said before, something like 15% might survive. Great. There are changes going on to moving to the digital world, but in the same way, when it comes to other tech companies, our excitement, which drives the media, can get the best of us. And another note from your bio was just that you challenge what you see as the long bias spin of cable news networks. Why don't you explain it for me? What is this long bias spin, and why do you think it exists? Is it an irrational assumption, or is it just the case, as you said, that the share market or investments have been rigged, at least in the United States?
Well, I think it's irrational. I mean, whether it's a question of something that the cable news networks are actively doing or they're doing just because they're ignorant, that could be up for debate. But I mean, what is a long bias, right? A long bias is you're operating under the assumption that current monetary policy works and that the market should only continue to go higher and that stocks should only continue to go up and that asset prices should only continue to go up and that inflation is a good thing. So, a long bias is succumbing to those principles and saying this is the end-all be-all, this is the answer, this is how markets should work, this is how economies should work. And I just don't buy that. And so, being from the Austrian school, I mean, I believe that savings is the way to prosperity and productivity should be the gauge of how an economy is doing and not jobs. And, all of these major differences, obviously, between the Keynesian and the Austrian school. So, everybody on the cable news networks, they look at everything through the lens that this Keynesian experiment is okay and that we have it under control and that, we should be thankful that we have such incredible central bankers who are such geniuses to have figured all this stuff out. And I just don't buy that. I think it's all a giant bluff. And I think, ultimately, as Ron Paul says, markets are way more powerful than central banks. And I think at some point we're going to witness that in some type of large correction and large kind of recalibration of things. So what I like to do is I like to just look at things and analyze whether it's the macroeconomy or analyze companies, specific individual companies. I like to do it through the lens of those principles that I strongly believe in.
How long can this bluff go on? Because I was just at a central banking conference out in San Diego a couple of weeks ago, and they recognize, the economists, they recognize that, let's say, the Federal Reserve is in uncharted territory. But then they would say, well, what's the alternative? What other currency is going to rise to compete with the US dollar? And they don't see any, so they just feel like it's going to continue for a long time to come.
Well, that's fine, and people that own gold will continue to be paid for that in whatever currency you want to measure it in. Look, their whole policy is beholden to whether or not the dollar is going to retain its value. The dollar is a fiat currency that is being compared to other fiat currencies worldwide. In gold terms, the dollar is worth less than it has been in a very, very long time. So gold is, nearing in on $1,600 an ounce, which is very different than what the price of gold was, 30 years ago, 40 years ago. And it has increased by an order of magnitude. So if you look at the dollar priced in gold, it has gotten significantly weaker. If you look at the dollar priced against other fraudulent kind of discretionary currencies that aren't backed by anything, I mean, what is it? It's a giant Ponzi scheme, right? You have worldwide currencies that are backed by the dollar, and the dollar which is backed by nothing. So how are you going to compare and say, oh, the dollar is strong because it's strong against whatever, it's strong against the Canadian dollar today, when the Canadian dollar isn't backed by anything and neither is the dollar.
It's peculiar, that statement, backed by something, because I was actually at an economics retreat or summit, and there was a top Columbia University finance professor there, and he made the claim that the dollar is backed. It's backed because you're required to pay your taxes in it. And I couldn't help but challenge him and say, that is crazy, because so too then is the Venezuelan bolivar backed, right? And I said, haven't we just had hyperinflation in that currency and every other fiat currency? Well, not every other, but other fiat currencies that have gone to zero. So there's a very peculiar form of backing.
Yeah, just forget about the revenue stream. Forget about the income statement. This guy wants to extrapolate how much money is going to be coming in from taxes because you're required to pay your taxes in the U.S. dollar. Big deal, right? Look at the country's balance sheet. We're $23 trillion in debt.
True. Yeah. What I see too is I just see price to earnings ratios getting higher and higher, and I just wonder, I guess like you do, when there will be a correction. As you said, it does seem like the United States is well overdue for such a correction, and yet there's just such a determination to not let that happen. How long can that be resisted?
We don't know, because we've never done it before. It's an unprecedented experiment in monetary policy, and we don't have a fucking clue how long it's going to work. And this is the frightening thing. These central bankers are acting as though they have the answer. They have the end-all, be-all. They've done this before. They know how well it works. We've never in history been at a point where we are right now with our monetary policy, with rates as low as they've been for as long as they've been. We've never been here before. So for anybody to tell you that they know how it's going to end is an extraordinarily arrogant thing to do. And I think that people need to be put on notice of that. I think the sooner that people understand that, the humbler decisions we can make and the wiser we can be when we look forward. And I think the less surprised we'll be when we get smashed when it happens. And I don't know when it's going to happen. I don't know if it's going to take 20 or 30 years for this thing to correct. I don't know if it's going to take 100 years. I really don't know. But here's the deal. Neither does Jerome Powell. Neither does Neil Kashkari. Neither do any of these guys. They don't know either, okay? They don't. You know how I know that? Because they don't have some big fantastical brain that's better than mine, that's better than yours, that's better than your listeners, that's better than my followers, that's better than the economists like Peter Schiff that I listen to. and Bill Fleckenstein, they're not smarter than these people. So all it is it's just charade. It is a long con, okay? It's a confidence game. And while we're in the midst of it, which is right now, and everything appears on the surface to be operating the way that it's supposed to be, even though the common folk, doesn't understand that things like inflation are a tax, while they're pulling the strings behind the scenes and everything seems to be operating as it's supposed to be under the guise of, hey, the stock market is the highest it's ever been, nobody asks these questions. It's only going to be once the genie is out of the bottle and once things have gone awry that people will turn around and say, oh, how come nobody mentioned this? And I think I'm not the only person that understands that and thinks that way. Otherwise, I wouldn't have people that are following and listening to what I say, because I'm not the smartest person in the world. I'm not some great, well-credentialed, economist. Yeah. I didn't grow up as a small child to say, oh, I want to be the guy that makes macroeconomic commentary. Like, absolutely not. Like, I could care less, right? But having lived through it and seen it now, I can't help but notice just how big of a con it is and how big of such an obvious Ponzi scheme that at some point the chickens will come home to roost. The question that you ask is the question that everybody wants to know, which is when and how bad is it going to be? Because, Jerome Powell said a couple of months ago, the Fed's job is to do anything to prevent a recession or do anything to keep the economy booming. And it's like, no, it isn't. Okay, that's not what the Fed's dual mandate is. And we've gotten so far off the reservation. We have gotten so many, deviations away from the standard at this point that even the Fed doesn't know which way is up. And a lot of people are going to get blindsided by it, It's like Mike Tyson said, everybody's got a plan until they get punched in the mouth. We're just waiting to get punched in the mouth.
Okay, wow. Well, before I let you go, do you want to talk just briefly then about, in your commentary, your research, what specific sectors or what analysis you get up to?
Well, I like to just look at anything and everything from a different lens than most sell-side analysts and financial news networks. So I look at individual companies. I look at all sectors. I mean, there's things. Obviously, I'm not an expert in fields that you need to be an expert in to be able to analyze, like biotech. I'm not a biotech expert, right? Like, I'm not an insurance accounting expert, so I'm not going to be doing deep dive forensics on insurance accounting. But generally, I look at everything. What do I like to own? I like to own gold. I think I have gold as a much bigger weighting in my portfolio than most other people. I think there's nothing wrong with that. I think gold gets a lot of shit. I think people in the media talk a lot of smack about gold, and I think that they will all be proven to be fools as history progresses and we get decades and if not, centuries down the road. As long as we continue on what is gold, right? Gold is a bet that the central bankers don't have a fucking clue what they're doing. So if you want to bet on the whole system being, I did this presentation 2 years ago in New York City called Short the Whole Fucking Thing, right? And the point of the presentation was, I don't want to short a company. I don't want to short, the auto sector. I want to short the whole thing. The global economy, I want to short everything that Jerome Powell does on a daily basis from the time he gets up and eats his Rice Krispies breakfast until the time that he has his red wine and goes to bed at night. I want to be on the other side of everything this guy does. I want to be his counterparty, right? I want to short everything these central bankers do. When I watched Neil Kashkari on Twitter a couple days ago make this statement basically ridiculing people that own gold and gold bugs as conspiracy theorists and idiots and all this stuff, I want to be on the other side of that arrogance. I want to be the counterparty to that arrogance, right? So that's why I like owning gold. And the best part is, even if everything stays the way that it's been and we continue down this Keynesian path that we've been on, gold is going to continue to increase in value because the purchasing power of the dollar continues to decrease. So I like gold. That's why I own gold. I think it's a hedge against everything else. Yes, will I play in equities? Will I play in options? Will I play in other currencies? Yes, I will. But the underlying core foundation of what I like to own and will continue to own will be gold. No questions asked. And it's very simple, boils down to a question of, do you think the people in charge have this thing figured out, and do you think it's under their control? Do you think it's under the control of the Fed and under the control of central banks, or do you ultimately believe that free markets will once again wrangle control away from these central banks? And hey, I'm a free market thinker. I'm a capitalist. I'm from the Austrian school. I think that the free market's going to win at some point. I don't know when. I don't know how. I don't know how ugly it's going to be. But that's ideologically where I'm coming from, and that drives a lot of my investment choices.
Right. His website is quoththeravenresearch.com, and maybe this is an easier one to find, QTR Research on Twitter. Any other website or place I should point people to?
No, I don't like to do a lot of promotion. If people are interested, they'll find me wherever I am. But I think the message is the most important thing. What's the message? The message is, do the anchors on CNBC have it figured out? And does the Fed have it figured out? Do they have it all figured out? Because there's a big stench of arrogance coming from these people as though they have figured everything out.
There's a pretense of knowledge.
If you think that they may not have, it's very important to just kind of keep that in the back of your mind and embrace commentary and perspectives from across the spectrum. As much as it pains me, I listen to Keynesians because I want to hear what they have to say. I want them to bring their best argument to me. I want to be able to hear what the best is. And if they can do is Jerome Powell getting in front of a podium and double speaking and back talking and changing the things that he said only moments prior in these FOMC pressers, if that's the best that these guys can do, you're damn right I want to bet against it.
Okay, and if you want to find links to get more of this man's work, Christopher Irons, go to goldnewsletter.com/podcast. Thanks for tuning in, everybody, and thank you, Chris, for sharing your perspective.
All right, Fergus, thanks so much, brother.